The market punches us right in the mouth before rebounding about half of its losses. Was this a buying opportunity or the start of something bigger down? Find out next on Invest with Jacob. So if you watched the video yesterday, you know that we expected the market to gap up over resistance and break out to new all-time highs approaching 4,400. However, we woke up this morning to the market testing support in a huge gap down of about 70 points. It recovered about half of its losses during the day, which begs the question, was that a buying opportunity? We'll get into that in just 1 second. But first, if you're new here, welcome to the show, guys. My name is Jacob Gabbard, and this is Invest with Jacob. And I highly encourage you to hit that subscribe button down below so that you can get our daily S&P updates, our trade setups, and our buy alerts. So there were a few people who asked me today in the room if we should buy the dip. And the answer is we should not. And there are a couple reasons for this. Okay, number one, we already have a full position in the market going long. Number two, when I mentioned a few days ago that this could go down as low as 42.87, we were at 43.20. And that drop is more of a standard pullback. When you approach resistance, as we did on Wednesday, and then wake up to find out that you were thoroughly thrashed down from resistance 70 points, that's a much different situation to buy the dip. We want to wait and see what the market does with that move down and decide if this is a bigger move down or if it's a wave 4 down. So what we're going to do is take a look at that on the chart, so let's jump in. Okay guys, so here we are on the 1 hour SPX chart, and I'm not going to do the big picture overview because I've done it in the last several videos, and I got a great idea from Andre to just do a standalone video about that. So I'm going to do that this weekend so you can have that, and it's going to be called, well, the big picture, because I'm super original with my naming convention, and it's going to go over where we are in the giant picture of the stock market, because when you wake up and see a 70-point gap down, it can be a little bit shocking, but if you zoom out a little bit and say, we're still 1.5% off the highs. We are more than double where we were in March of 2021. So we've had almost over 100% gain in the market in a little over a year. It's really not that big of a deal. It's just a little bit of a punch in the face to wake up to. With that in mind, just know that we're in a very bullish market. We have very bullish setups, and pullbacks are going to happen. And this one happened to hit some levels that were very key. So let's take a look at that. Now, when you measure the waves 1 and 2 here, okay, you get our Fibonacci levels that I already got put in here, and we hit the 1.0 Fibonacci level off of that measurement. So we hit the 1.0 extension almost perfectly. And while we were looking to target the 1236272 extension area at 4,400 because that's the most common place for a wave 3 to hit, the second most common place is the 1.0 extension. So we did hit that in a resistance zone and got rejected. Now the good news is that rejection put us right down to the 618, which is the most common fib for us to hit on a wave 4 pullback. Here's a little Fibonacci trick, by the way, guys. So I was talking to one of our members about this, and I said, you don't have to put the fib retracement tool up to find out where to go on a wave 3 of 3, because you can just know that if we hit the 1.0 extension, okay, it's going to target the 618 extension on the way back, which it did. It hit it almost perfectly, okay, and then it bounced. And if you target the 1236272 area, then you're going to most likely hit the 0.764 extension. So you don't even have to put the retracement levels on there. Now, why is that? Well, let's put the retracement level on there and see how it looks. Because if you do a little math, go to the top of the wave here, those fibs line up perfectly, okay? Because if you do a little math, this is the 100% extension, right? So 100 minus 38.2 gives us 61.8. So that's how we can get our retracement levels without having to put our retracement tool on the actual chart. So it just saves us a step there. So in going back to the chart, you can see we bounced off the 618, which is what we would expect if we had a wave 4 pullback. So is that where we are? Is this all of wave 3 of 3 up here to the 1.0 extension and wave 4 pullback, or is it something different? And the answer is we don't know yet. It's too early to tell. There are two scenarios basically playing out here. So the first one is, as I mentioned, we hit the 1.0, we bounce to the 618, and then we move up and complete wave 5 up to the 1382, which would be the 4440 area. Now, normally we would target the 1618, but we did not hit the upper end of wave 3, so we do not go to 1618. We pull back to the 1382, which again is the 4440 area. So the second scenario that's playing out is we've completed a much larger wave here, which means a much larger pullback. In that scenario, this is just the A wave of A down, then we would get the B wave of A bounce, and then the C wave to complete wave A down. Then you would get a B wave bounce and then a C wave equal to A down, which would put us more in the 4220 or possibly lower region depending on how this plays out. So because of that scenario, we did buy protective puts today, and that allows us to hedge our longs by collecting if the market does C wave crash down tomorrow. All right, so those were pretty cheap, and that way we can keep our long position because it doesn't expire till mid-August, and we can not have to take the heat on another move down because our puts will protect us. So guys, if you want real-time updates on what's going on in the market, you need to get in my Facebook group. There's a link down in the description. You get in there and there's a link to our Slack channel. It's a free chat channel. And you get in there and I give you real-time updates on what's going on in the market, our buy alerts, our sell alerts, if we're going to do things like add protective puts to protect our position so we can keep it for a rebound here because we are in a bullish market. If you want to know exactly what we're buying and when, go ahead and get in that Facebook group, and in the Slack channel, there's only one condition, guys. The only thing you have to do, you got to subscribe to my YouTube channel. So hit that subscribe button down below and then join us over in the Slack channel so that you can get in our trading group. We would love to have you there. Key takeaways for today. Yesterday's low is of the utmost importance. If we break down below 42.89, we're looking at probably a C wave of A down and a much larger correction at that point. Our puts will protect us should that happen, but that's the first level we're watching. If we're watching above, we need to take out yesterday's high, which was 43.30. We trade above that and we have a 5-wave up scenario off of the lows, which gives us a little more confidence that we have bottomed in wave 4 and we are starting the march in wave 5 up. All right, guys, that is the market update for today. Have a wonderful weekend. I will talk to you next week.